Alrighty. How's everybody doing? I got some news out of Financial Juice. Traders raise the odds of a 4% terminal rate in the ECB. 50% chance of that occurring. Highest since March, which is back when we originally thought this whole recession thing was going to start. Not good, not good. Hey. I'll put a link to this in the description if you want the song. Had the song in my head this morning. I'm like, I gotta play this for the stream. Someday, I gotta commission Flower. He's a pretty small YouTube channel, but I've seen him come up in a lot of the videos that I've watched, and I really like his music. I gotta commission him for some stuff, man. If it even is a guy, I don't know. Yeah. Anyways, let's get right on into the stream. Look, if I go ahead and I hide this, like, oh my god, these monitors get so bright. Oh my god. Oh. Anyways, I got some analysis here from the chief quantitative strategist, Carl Steiner, out of SEB. He went ahead and did a little bit of analysis for us. And I'll go ahead and, real quick, copy that over. It's related to the ECB. It's this little paragraph here. Now, if you're immediately like looking at this and you're like, yeah, I don't want to do that. You shouldn't be trading, because reading what is this? It's like 4 sentences, 3 sentences. It takes 20, 30 seconds. Not even that that's how long it takes to read out loud. Maybe you could read it in like 5, 10 seconds. Just take the time to read the opinions of some of the smartest people who are in charge of managing tens or hundreds of millions of dollars, right? What they have to say is probably very insightful. And in all seriousness, what he has to say here is pretty straightforward. But I think the most important thing of what he has to say is this last sentence here. The euro-dollar exchange rate has so far this year mainly been guided by expectations of the relative monetary policy between the Fed, FOMC, and the ECB, with a slightly more hawkish Fed than expected yesterday, right, with anticipating 50 basis points of rate hikes out into the future while skipping this meeting. A rather hawkish ECB is therefore also needed today for the euro-dollar not to continue the initial movement lower. So just for clarification's sake, this a rather hawkish ECB, understand that the ECB has already been expected to hike at this meeting and the next meeting for quite some time now. So when, Carl here talks about a rather hawkish ECB, he means above and beyond maybe the ECB comes out with their own set of higher future expectations for what their terminal rate is going to be. And say, we're not just going to be hiking here and in July. We're also potentially going to be hiking well past the summer. However, considering that the market is now pricing in that the Fed effectively is going to just do maybe 2 or, somewhere between 50 to 75 basis points more worth of hikes in total, that's not still as hawkish as the Fed. And relative to the Fed, for the euro-dollar exchange rate, it's going to put some negative drift on it. Whether or not that happens immediately and right away is frankly going to be up in the air. But if we look at these indicators and we look at some risks for the month, like the top for the month, you know how every single day on these daily plan streams, I use this indicator here to tell us, where's the most likely low, where's the most likely high, based off some statistical probabilities of an actual statistical distribution. Well, this is saying, hey, there's actually a not so insignificant chance that you've probably hit your high for the day already, and a not so insignificant chance that you've hit your low for the day. So making a new high or a new low on the day here, I'd be careful. I just would be careful. Because any spike above here or any spike below here, it might be a buy the dip down here. It might be a sell the rally up here. I have a quite neutral expectation for how the rest of this day is going to play out. I don't really have super strong expectations other than over here I've been short, and so far I've been doing pretty all right. So guys, go ahead and let me know if there's any specific assets you want me to make sure that I cover. Real quick though, I do want to cover CAD real quick. I think we topped out for the day over here on CAD. There's maybe a little bit more room for downside, maybe, but I think we're going to get a more conservative low in there. Oh man, I really wish I added down here, but, don't want to do that going into FOMC, right? And then once FOMC gets realized, we went up and away, right? So, yeah, trading on dollar CAD is now done effectively for the day. Euro dollar is pretty freaking neutral. Oh, and you can see here on TradingView the economic calendar just above me. You can see the timestamp 5:15 for the ECB meeting, and the timestamp down here. I think if I point right there on the chart, right, if you look, there's a little timestamp saying 4:39. That's exactly the time. So we have, call it 35 minutes until the ECB meeting. And the fact that we're going down into the hour before ECB isn't, it's not the strongest case, right, for a particularly hawkish ECB, although we did have this rally, right? I mean, net, it's been a pretty flat day, right? This is where we opened. We're just a bit down on the day. It's not all that impressive. You can see kind of why I have a more neutral expectation here. But you know what? Before going into like equities and crypto, right? Because we'll do trade plans for equity and crypto and a few more FX stuff, right? Let me go ahead and kind of cover the title of this Eurodollar 109.50 risk. Now, because this is my stream, I get to decide what time frames and what range probabilities I get to show you. So today you guys are going to get a bit of a special little treat. You guys are going to see what the monthly, so this is what it looks like in the settings. You just change the time frame to monthly. And this is what the monthly range probabilities look like. So when I'm doing my trade plans and my risk management, first off, I'm looking at these monthly trade plans and these monthly levels, and then I'm going and doing the same exact analysis on weekly levels to figure out, okay, on a week-by-week basis for the week ahead or the month ahead, what levels, what prices should I generally be interested in? What prices should I expect as my threshold levels to either go higher or to go lower or to get stopped out at? And then I read outlooks to have some sort of trading expectation, looking at the economic calendar for maybe some timing expectations. And one more thing that I do is I look at the indicator here, seasonal forecasts. And you can see the seasonal day-to-day forecasts are actually still quite bullish. So there is real risk here of going up to at least the 109s. And you can even see the forecasted seasonal bars have you moving quite a bit up over the next 5 days. But I don't know if today or the next 5 days are going to behave seasonally, to say the least. And that seasonal forecast indicator also is included in the trading group, and the trading group gives you access to all of my indicators. So if you join, that's $100 a month. It's incredibly affordable, and then you get access to me one-on-ones, the trading group plans, a chat with all of my trades and what I'm actually doing, and then weekly group only analysis. So you'll get a 1 hour and 30-minute video of me going through all the trade plans for the week ahead and potentially the month ahead every single Saturday. So coming up here in 2 days. So if you want to get that video and get these indicators and follow me in the style of trading that I'm doing, go ahead, hop into the trading group. Links in the description. It's the wap.com link for boss benchmarks. So you go there, join the trading group, plus indicators, $100 a month, and you're all set. And I think you can clearly see just by looking at this indicator why I point out there's a risk of going to 109, 109.50, because right here you have quite a good chunk of your probabilities, right? And you can see that these distributions update every single bar. It's recalculating and resimulating the entire distribution. It's simulating random data, 5,000 random data points of this distribution, and giving you new data every single time the chart updates. So you get slightly different shapes and slightly different probabilities, but what you want to see is some consistency between every simulation. Because if you, from one simulation to the next, to see something that's super anomalous, it means, oh, that was just for that one simulation, there was something weird going on, which is one of the reasons why this is the default behavior, where you want to keep simulating as much data as it possibly can, so then if there's any anomalies, you can real quickly point them out. And you can also identify, like, oh, there's a big chunk of probabilities that occur right around here for where the top for the month is anticipated to come in at. And every single time we're simulating this data, these probabilities are here. And then the same thing with the likelihood for getting your top for the months down here. So this would be your more bearish expectations. So if you were a bear on the whole month on Eurodollar going into this month, this is where most of your bearish tops for the month would usually occur. This area is like no man's land. So, usually you don't end up trading in these areas, right? I was trading just around here. I wasn't even thinking we'd spike up that high. I was expecting a Fed rate hike yesterday. And while I was wrong on that, I did get future higher rate expectations of 50 more basis points. So net, while I was wrong in the expectation, the trade still did well and I properly risk managed it. So in the end, everything worked out totally fine and, beautifully, arguably. I think it was a bit of a messy trade, but when it comes down to the risks ahead of us now, if the ECB wanted to stay relatively as hawkish as the Fed, so that then the euro-dollar exchange rate didn't just collapse on itself, the ECB might be incentivized to do something more hawkish, either do the 25 and issue more hawkish policy, and then have Lagarde come out and be extremely hawkish in of herself, right? That would be a scenario where you could quite easily break the high from the prior day's high. You can see I even got an alert here set up for it. And then reach this area where this is the next most likely area you're going to get your top for the month. Somewhere around the 109, the 1096 area here. This is just a risk management analysis at this moment. I'm not anticipating we'll actually go up here, right? But I'm making the trade plan ahead of time saying, hey, this is actually a real possibility. And we don't know what's going to happen yet at the ECB meeting. So unless the ECB wants to do its own hawkish surprise like every other central bank has done for the last 2 weeks, which, may or may not actually be a surprise, it'll depend on how hawkish that surprise is, if there is one, right? So this is just a good thing to have our eyes on to make sure that we don't get smacked here. Alrighty, let's see here. Alright, I think that's the headline. That's pretty much the major thing I wanted to discuss and show you guys. And also, give you guys a taste of what the monthly analysis looks like with these tools. I'll be going over some more monthly charts and weekly charts for about 20, 30, maybe 40 assets come Saturday for everyone in the trading group. So everyone in there is going to be pretty happy about those videos. And you know what's cool? You go through all those charts, it's like a minute a chart, or like a minute and 30 seconds or so per chart. You end up going through all those charts in about an hour, and you have then all of your trade plans for the next week and the next month done in an hour on the weekend. Like, I end up spending far more time. I end up spending like 3 or 4 times as much time reading outlooks and trading expectations and scrolling through Twitter, like looking for more stuff to inform and educate myself on various assets, on various economic effects, on various relationships, just so then I can actually qualitatively improve my trading knowledge. And I find you get more ROI doing those activities than staring at charts all day and trying to draw lines and whatnot. If you have high quality tools that can help you make trade plans like in a minute just by looking at the chart, like, oh, here are my trading expectations, here are my bullish bearish scenarios. Now let me go ahead and actually do my discretionary trade research so I can make those discretionary decisions and determine my conviction, what trading convictions I should have, whether or not it's bullish or bearish, right? Then figuring out like, oh, what are the economic events coming out, right? Getting knowledgeable, getting competent about what risks there are, what opportunities there are. It's such an easier way of approaching how to trade. And it's a much faster way to learn how to trade. Oh, man. It's faster, it's easier. you actually have proper statistics that tell you the probability of these events, just face value, right? Yeah, I think it's easier at least. All right, I want to go ahead and check out the equities markets, see how the equities markets have reacted. So it looks like the ES has been pretty darn flat here on the day. But oh man, I mean, it was flat yesterday. You can see this was FOMC, and now we're kind of waterfalling. Yeah, it's a little difficult to tell where we're gonna end up, but I wouldn't be surprised if we got to the 4380s here on the ES. I mean, if 4390 would actually be a pretty reasonable expectation if you were more aggressively bearish. Just looking at this data here. Because you see, this is where your low would usually come in if you were expecting a more bullish trading day. Somewhere here, effectively just above 4,400. And now you're at 4,400, and it's just more or less a matter of, do you actually hold this level today? Sure, you absolutely could hold it, but yeah, you just want to be cognizant, like, okay, there's a risk of losing another 10 points today on the day for where the low could come in. Let's check out the NQ. NQ, pretty much the same thing. It had a more bullish trading day, right? It had a more bullish end to the trading day yesterday. I mean, look at that, right? And also, I'm sorry, I know all these tickers are delayed, right? But the NQ data and the ES data, like all the actual futures data, it's just better. The actual data on the chart's so much more reliable. I would actually anticipate the low for the day on the NQ to come in like right now. And yeah, if you start going below this S1 pivot here, 15,035, once you start going past there, it's going to be kind of hard to say exactly where you're going to end up. Because, hell, you could be making new lows. Yeah. I don't think you'll get, like, super crazy tail risk odds, right? Because those tail risk odds are down below 14,910. Once you go past that, it's like, who knows where you're going to end up. That's falling knife situation. But there's, yeah, like either things gotta bottom out here, or maybe you got a shot of maybe a bullish trade here. Let's check out the closing odds on the day. Yeah, I'd want to be pretty darn careful. I mean, if the thing came to 15K flat, it might not be the worst buy in the world. You could have your stop right there at S1.5. But now you're talking like a 50, 46 point stop, and then what's the reward potentially on that? You're talking maybe you get 60 to 80 points out of it if you kind of mean revert a bit higher. It's just more or less a matter of, do you actually get the rebound lower today? What would be a good catalyst for that, right? Oh, great questions to be asking. I'm going to go headbound back to Financial Juice, see if there's any new information here. A North Korean missile appears to have landed inside Japan. Or they're inside Japan's EEZ. I wonder what EEZ stands for. But apparently a North Korean missile has landed inside of some territory that Japan has ownership over. Ooh, Dutch government plans to shut Europe's biggest gas field in October. I wonder why they're deciding to do that. Yeah, expensive commodities is not good geopolitically for Europe as a whole. All right, let's keep on going down the list here. Let's check out a good old TLT. Well, on the day, yeah, I probably would have been careful once you started going past this R1, but this is actually a reasonable spot to start taking on a little bit of risk. I don't even know if, yeah, I don't think I would have even taken these trades unless it got a little closer to this R1.5, and then you're putting your stop right around 1026. Because then past 1026, you start dealing with tail bubble scenario stuff. Yeah, it maybe it didn't went just barely high enough. Let's see here. TSX. This is the Canadian composite. Oh, they haven't started trading today. All right. All right. How about the Dow? The Dow got hit especially hard yesterday. So this was yesterday. You can see how FOMC hit the Dow really hard. It's effectively the inverse of the NQ. Let's see how the Dow Jones futures are working out here. Oh, yeah, it's... I don't know. The odds look kind of flattish. I think I'd only start to get concerned about a lower Dow at 34,150. So the low might be in for the day now, and I'd just be careful past 34,150 of more movement lower. But I'm not anticipating more movement lower on this. Not today. Let's see here. What else is there? We got crude. So let's go ahead and check out crude. Is the low for the day in? Oh, wow. It's almost like having some statistics would have helped you buy this low or something. And don't get me wrong, you know, there's a psychological level, a flat level of $68 right here. Man, oil totally reversed a big chunk of this rally here off FOMC. Yeah. Oil maybe has a bit more room to go. It'll probably hit that R1 pivot, but it's still a little too early to tell in the day. You have to kind of see how equities are going to do. But yeah, what I mean by where these lows are is you can actually see, if I hide the drawings, or rather if I hide the chart, you can just see, hey, there's a bump here in your distribution for where most of your lows occur. And this is where our low occurred. Now, most of the time, your low occurs above here, call it 50% of the time. So if you are a bull today, oh, great, you know, you were able to buy into this. Otherwise, you probably would have said, hey, you know, if we start going below 67.80, you know, you're dealing with more bearish targets and bearish risks here. So yeah, this was absolutely tradable today. Absolutely was tradable. Whoa, natural gas. We're going to see some... This is definitely a tail move. Whoa. Quite a bit of volatility. Wow. I think this is in a reaction to the news from the Dutch government shutting down Europe's biggest gas field in October, right? I think this is probably some reactionary news to that. Don't you guys think? Yep, and just double checking my trades here on my other monitor. All is well and good in the land of Boss's portfolio. Oh, Eurodollar just puked. Damn. Just in the last 30 minutes, Eurodollar, this is when we started the stream here, right here at 4:30. We were right up here at the start of the stream, and now we're all the way down here. We're down like 20 pips. That is not a good sign to see a bearish front run going into ECB today. CAD is holding up. Let's go ahead and actually look at the day, right? Generally, that's your top, right? All that good stuff. Are there any assets you guys want me to cover today? Yeah, Pascal, I hear you. I hear you. Yeah, you know what's interesting is that there are a lot more European politicians that are coming out and being more vocal about being anti-green energy because they're finding out there's some scams going on in green energy, and that gives green energy a bad rap to say that, but there are scams going on in ESG, some exchanging of monies going on. There's been like 5 or 6 different documentaries about all the different crap that's gone on. But yeah, I have a pretty strong opinion that you probably want to make sure that your green energy transition has the highest likelihood of success by actually making sure you don't kill off how everyone is already getting their energy and their work and generating the revenue done with oil, right, and gas. Because if you cut off the oil and the gas too soon, it'll slow down the economy to the point where it won't be able to generate the funds needed to subsidize green energy research, right? And there's some good things that are coming out of green energy research, like solar panel developments and whatnot. But you can't just stop all energy deployment, especially when energy is still so highly linked to inflation and the prices that people pay day to day. It just doesn't make sense to try and not pump as much. Well, here's another thing. The United States should not be shutting down, and Canada should not be shutting down its oil production, because then guess who goes and produces the oil that has to get consumed? It's all these other countries that have worse working conditions, worse pay for their civilians, and it's dirtier oil. It's like blood oil. Like there's blood diamonds, right? But in the United States, we have great regulations. We have very thorough reviews, and I mean, just go ahead and talk to any dude out of the Dakotas, right? Talk to any oil field worker in the last 15 years out of the Dakota states and let them lecture you, right? Because those guys effectively got their master's or their PhD degrees in these topics, right? I think that'd be an interesting thing to do one day, myself, is go up to the Dakotas and talk to some oil guys just about what it's like, maybe there's some YouTube documentaries on it. I certainly bet that there are, because now a lot of those guys who moved up there in their early 20s now have families, and they're approaching their 40s, or they're in their mid 40s now. And they're climbing up the ladders now. The millennials and are climbing up the ladder in the oil industry up there. Those are the guys I'd prefer to follow, and hopefully we get some good leaders out of the Dakotas. Who knows? Maybe in the next 30, 40 years there'll be a U.S. president from the Dakotas. I think there's some pretty strong-willed and character people coming out of the Dakotas. You want me to check out some JPY pairs, Pascal? Alrighty. How about we check out Euro Yen? I mean, why don't we just check out all the Euro pairs while we're at it? Whoa. Check out that run. Yeah, this is a very unlikely price for us to be trading. This is tail risky scenario here, so it's like short this at your own peril. Don't get me wrong, there's a psych level here of 153, right? So maybe you saw these odds, these low probability odds, and the psych level 153, and the upcoming ECB meeting potentially not being as hawkish, and you're like, maybe I'll take a stab at it. But even then, compared to Japan, just take a step back and understand the thing that we read earlier from the chief quantitative strategist of SEB, right? He was talking about how because for euro dollar, the Fed came out more hawkish that it's going to send the euro lower, because one of the things that has been driving euro dollar appreciation has been the relative gain in hawkishness from the ECB relative to the hawkishness from the Fed, that the ECB's been on the more hawkish side of things up until the most recent meeting. Whereas the Bank of Japan is one of the single most dovish central banks out there. This thing can just keep going up, up, and away for who knows what. Let's check out pound, euro pound. It's effectively going sideways. I don't really have any expectations of it, but I think this was a good range trade. Oh my god. I was about to say this is a great range. This looks like it's going to be a great range trade scenario here, and just look at this thing, how it tapped the top for the day right here in this little bump. Now the scary thing is I don't know where the hell the low for the day could potentially come in here at. Yeah, these are all pretty flat odds. See how it goes 5, 5, 6, 7, 6, 7, 5, 7, 5, 6. The probabilities are so close together within margin, and they're so evenly spread out between the central pivot here and like S3 that it's pretty hard to predict exactly where the low is going to be, even on a normal trading day for this pair. So either effectively you're getting your low right off the bat for the day, or you're maybe sort of kind of guessing. Now, don't get me wrong, if maybe you ran 10,000 simulations, 100,000 simulations of this indicator, maybe we'd get some more convergence, maybe right around here or right around here, right? Maybe if we reduce the look back, now you start getting into sort of fitting things, right? Instead of just looking at the distribution with all the settings, including as much data as you possibly can. So, and we don't really need to fit this data. We don't really have any particularly fantastic reason to try and, fit or sample the data or whatnot. So I would just stay on the more cautious side, frankly. I'd just stay on the more cautious side for the downside, right? I could look up some outlook analysis for euro pound. But I want to stay here looking at the charts. This is going to be a pretty chart heavy stream. Euro CAD. Oh, this is what I want to see. This is what I want to see. This is one of the tickers that I'm keeping an eye on, because what am I doing in my portfolio? I'm short Eurodollar and I'm also long the dollar CAD. And what I want to see here, just frankly, is Euro CAD going lower. Oh my god, the down moves for Euro CAD are so... You can get some pretty volatile down moves on Euro CAD, huh? Jesus. This thing always takes like the stair steps up and the elevator down. Like, holy smokes, dude. This is like going back to May over here. Yeah, I'd be careful. Like, as soon as you start to see like little red bars, these little red bars can put the kibosh on your price. Like, man, you can see like 50, 60, 70 pip bars in a couple of hours just show up out of nowhere. Yeah, well, Philios, one of the Pascal, one of the reasons why the indicator is so accurate is simply because it's based off the data from the chart, right? We're pulling our data off of the chart. We're not trying to, we're not back testing any strategy. We're just pulling the data off the chart and interpreting the data as it is literally. And then with some extra trading expectations, we could say, oh, that if you're anticipating an especially bullish trading day, then once you go past these prices, this threshold here, then we need to be more cautious about continued upside. And then you can use those as like levels to enter a trade, levels to get stopped out if you're anticipating the exact opposite thing. The strategy becomes a lot more straightforward. And then you can still see I have like a technical indicator on my chart here with Wayne's Pivots Pro, right? And that's helping me make decisions as to like, okay, what are some good levels and thresholds, some prices to keep in mind. And then there's different trading strategies for the pivot points in and of themselves that I can overlay with my statistical interpretations. Oh, we're getting a neat little rebound here out of the euro dollar. See that? Nice little rebound here. Good on the euro. Nice, nice, nice. All right, 30 seconds to the ECB rate. Let's listen in on Financial Juice. All right, 10 seconds. You guys will probably already know it by now.
Ten seconds. Hike 25 basis point hike, 25 basis point hike to 4% as expected. Deposit rate hike 25 basis point hike, 25 basis point hike to free spot 5% as expected. So the ECB says interest rates. Does ECB decided to raise interest rates, the three interest rates by 25 basis points, and says staff have revised their projections for inflation, including energy and food, especially for this year and next year, owing to past upward surprises and implications of robust labor market for speed of disinflation. So the ECB says, according to the June macroeconomic projections, the Eurosystem staff will expect headline inflation to average 5.4% in 2023, 3% in 2024, and 2.2% in 2025. So the ECB says they now expect the economy to grow by 0.9% in 2023, 1.5% in 2024, and 1.6% in 2025. ECB says staff have slightly lowered their economic growth projections for this year and next year. ECB says ECB's future decisions will ensure that the interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to the 2% medium-term target and will be kept at those levels for as long as necessary. ECB says the ECB confirms that it will discontinue the investment under the APP as of July 2023. It says, in particular, interest rate decisions will continue to be based on assessments of the inflation outlook in light of incoming economic and financial data, dynamics of underlying inflation, and the strength of monetary policy transmission. ECB says accordingly, interest rates on the main refinancing operations,
All right,
interest
Eurodollar
rates
making
on
new highs on the
marginal lending
day.
facility and deposit facility will be increased to 4%, 4.25%,
Let's see if we
and
can get up to
3.5%
here.
respectively, with effect from June 21st. So ECB says, as it concerns PEP, ECB intends to reinvest principal payments for maturing securities purchased under the program until at least the end of 2024. ECB says the decline will amount to 15 billion euros per month on average until the end of June 2023. ECB will discontinue reinvestment under the APP as of July. To repeat, will discontinue the APP again. ECB to regularly review how silk can contribute to the policy stance. ECB says PEP reinvestments to run through at least to the end of 2024.
All right. Play it out. Look at what I got. Pivot the range probabilities indicator taps it again. Taps it again. The trades did not come, ECB did not come in more hawkish than expected. And guess who properly used their trading allocation, right? Guess who's about to post a trade alert, or at least a trade record, right? I'll just show it on the stream. I was able to get a little bit of a higher price, so now let me go ahead and update my current position. So it's got my net position just a tad higher, right? It was like a little bit lower, a few pips lower, but I got in a little short right around here at the R0.5 pivot, just below that. I don't think we're going to be going too much higher on the day. Inflation expectations are to remain higher for longer. Indicator for underlying price pressures remains strong, although some show tentative signs of softening. ECB to ensure future PEP roll-offs won't interfere with stance. So most traders think this is going to be the last rate hike. I don't think so, right? I think we're still going to see one more rate hike out of the ECB, and maybe that'll be the terminal rate. But man, am I happy I was able to grab that short. I've been saying for like the last 2 days.
So in 10 minutes time now, we do get the US retail sales month over month forecast minus 0.2% on the prior of 0.4%, with a range of 0.5% to minus 1%. US initial jobless claims forecast 245k on the prior of 261k, with a range of 268k to 230k. US continued jobless claims forecast 1.768 million.
Gonna put them on mute. You know, those US jobless claims numbers are probably gonna move euro dollar more than the ECB. Retail sales are probably gonna move euro dollar more. But yeah, I got the short for the last 2 days here. I mean, you guys saw, like, back here, I was ecstatic. I was able to just get a little bit of a short here. And I'm still holding on to that short, believe it or not. And then I shorted up into FOMC yesterday. I shorted up, and away here. And boy, was that a great decision. And here on the ECB meeting, I shorted it again. And each time, I was using 10, 20 basis point positions. And now I got decent size, I have time, and I have macro information that has informed me on my trades, and I've been just tiptoeing into the trade, right? Because of the increased amount of volatility, the potential for surprises, right? Don't oversize into these sort of crazy events. And now it's like, oh, great. I have a neat, normal position, at least normal for me. And now I just want to see this thing actually roll over and follow through. Because I don't think, I think maybe the low is in for the day, to be quite frank. Like, the low is probably in for the day here at 108. I think sometime next week we'll end up going below 108. And I'm just so happy I was able to get my shorts around here. And I was saying, you know, if I could get 108.30 to 108.50 for my trades, I'd be ecstatic. And guess what? I got trades short on euro dollar all the way from 108.2 up to 108.5 here. And believe it or not, I am still cautious enough to know that that this thing could go maybe a little bit higher, right? Maybe into tomorrow, right? Who knows what could happen? I think that the larger moves and my conviction for euro dollar short will get realized maybe sometime next week. So I've still got quite a bit of dry gunpowder here, positionally, and I'm ready to go. Oh man, dollar CAD is performing beautifully. It is rebounding beautifully. You can see right here, up, 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 up. Perfecto, perfecto. For this latest entry, Pascal, I'd probably just put the stop at this R1 pivot. 108.7, somewhere between 108.7 and 108.8. Still getting a little bit of strength, but like I said, I got the dry gunpowder here. I may get even slightly better entry here. That'd be fantastic, man. But yeah, this isn't a particularly strong ECB meeting. And now we still have the press conference coming up in 20 minutes from now. We still have the ECB press conference coming up. And then we have someone from the BOE speaking later today. Oh, we have Canadian manufacturing sales coming out. Yeah. Yeah. Everything going as expected so far. As expected. I am happy, happy, happy. And here's the dollar CAD on the other side. The nice little up boost. Good, good, good. Love to see that. Canadian house starts came in lower. I wonder if that's terribly significant. Well, housing starts can be a leading indicator. It can be. Well, housing starts follows permits, right? So permits are the leading indicator for house construction. And then starts are people who execute on those permits. So it's kind of the realized or actualized version of those permits. So to see that the permits have come in lower and much lower than anticipated signals that maybe the Canadian economy for construction is weaker than anticipated. Good for me, because I'm short the CAD. All right, well, first off, thank you guys for watching the stream so far. We still have an ECB meeting up ahead of us. In 2 minutes, we are getting Canadian manufacturing sales, US retail sales. We are getting US core retail sales, the Philly Fed Business Index, the New York Fed Manufacturing Index, US initial jobless claims, and US retail sales. So we're about to see how well these trades pan out over the next 1 minute. Let's give Financial Juice a listen here. Come on, baby.
One minute remaining. I'll lead with the US retail sales month over month.
$15 seconds here.
$10 seconds.
Oh, pull back on that euro. Spike up on the dollar CAD here. We got some front running.
0.3%, 0.3% higher than the forecast of minus 0.2%. US initial jobless claims still waiting for the data.
Oh.
US
Not
core
good for
retail
dollar.
sales month over month
Reaction's not good for dollar
0.1%,
initially here.
0.1% in line with the forecast of 0.1%. US initial jobless claims 262k, higher than the forecast of 245k.
Nope, not good for
Seeing a bit
dollar
of
here.
whipsawing to
Not
the
good for
upside in the
dollar.
S&P 500.
Euro's
The
making
US
new
Philly
highs on the
Fed
day.
Business Index minus 13.7, minus 13.7, higher than the forecast of minus 14. New York Fed Manufacturing 6.6, higher than the forecast of minus 15.1. US import prices month over month minus 0.6%,
Notice
minus
the range
0.6%,
probability high
lower than the
for the
forecast
day.
of minus 0.5%. US continued jobless claims 1.775 million. 1.775 million, lower than the forecast of 1.768 million. Canadian manufacturing sales month over month 0.3%, higher than the forecast of minus 0.2%. Still waiting for the US retail sales month over month. US export prices month over month minus 1.9%, lower than the forecast of minus 0.1%.
Jobless claims higher. Whoa, there you go. New highs here on the euro dollar bill, y'all. And we're breaking actually the high from yesterday on FOMC. Alrighty. Thank you for the alert, Mr. Trading View. So let's break this down. U.S. retail sales.
U.S. Treasury yields pair gains after the economic data there. So 10-year yield up 2.1 basis points at 3.819%.
Yield spreads. That reminds me. Check out the yield spreads, Joe. Check out the yield spreads. Yield spreads. Yield spreads are still moving a bit on the positive side. Yeah, they're not insanely bearish. Like net, they're bearish, but rate of change basis. Yeah, rate of change basis, they're still green, so net, this should still be good for further euro-dollar moves, in all seriousness. Yeah, net, this is probably still going to be good on the euro-dollar for the day. Probably going to see a bit more higher highs here on the euro-dollar. So remember what I said with the risks to 109.50, right? Be careful. Be careful. You don't want to see this momentum continue building up like that. So let's continue breaking this stuff down. U.S. retail sales month over month, still positive, still growing. U.S. Philly Fed Business Index, still in negative territory. A little better than forecast, but not by that much. New York Fed Manufacturing Index, it was expected to come out super negative, negative 15 on the index. Oh, we're moving. We are chugging along here. Let's check out that DXY. Yeah, DXY just made a new low here on the day. Oh man, well you know what? You don't win them all. However, I'm still not quite sold on the reaction here. I'm still not quite sold. Yeah. I don't know what it is. I'm still not sold on it.
So Treasuries pair declines after the mixed economic data.
All right.
So in 10 minutes time now, we do get the ECB press conference with ECB's Lagarde. We'll get the video out on the feed for all those interested.
You know how Powell started speaking yesterday and price just reversed? I wonder if that's going to happen today too. As soon as Lagarde starts speaking, it just reverses.
May 2023 full report on the feed for those interested, and the weekly initial jobless claims report for all those interested.
Again, I got a bias. I'm long dollar, right? I'm just kind of waiting for things to move more. I'm waiting for the ECB speech, the press conference, to come out. I did take another stab at a short. God, you know, it's exactly because of situations like these that I stay super conservative with my position sizing, because volatility just spikes against you, or volatility spikes in your favor.
So we have put out the video to the ECB press conference with ECB's president.
All right, thank you very much. I'll go ahead and pull up the ECB press conference video. We'll do the same thing like we did yesterday with good old Jay Powell. Oh, I almost forgot. I've been looking at my charts the whole time. You guys gotta... Whoever was watching needs to tell me I needed to switch back. But then again, you know, that's kind of my job. But here I am looking at the charts, actually trying to trade this stuff here. Here, real quick. I gotta do another ping in the trading group. Another ping in the trading group. And real quick, let me once again update my net position. You can see that since we moved so much higher up here, and because I took a position so much higher up on this, my new net position moved up like 10 pips. So I'm quite happy about that. So you've seen how, like, over the last 2 days, 3 days of streaming, my position has gone from 108 to effectively 108.5 over the last 3 days, like incrementally, very slowly, right? I'm able to take stabs at this every single time we're reaching highs for the day. I'm not trying to buy into Eurodollar shorts at like these lows here or these lows here. I'm actively shorting into rallies, right? Into places where I think the likely high could be. So I took a little short here. I'm taking a little extra short there, right? So let's see. Let's see how this plays out. Either way, I still got plenty of ammo left here. If I could get like 108.8 on my position, and I can do this all day going into I don't know, maybe going into like next Wednesday, next Thursday. Because I'm pretty convinced we're gonna probably get a rollover here. So you see, instead of putting like the whole 1% of your account or 2 or 3% of your account on each individual trade and then having to constantly add margin, or, you know, if you put on your whole account on the trade all the way down here, and then it draws you down and draws you down and draws you down, and you constantly have to chip away little itsy bitsy tiny losses just to make sure that you can maintain margin on your account. Like, That's no way to go about doing this. All right, that's the ECB music. Okie doke. And now the spectralizer thing at the top is back onto my voice. So we're currently waiting for the ECB press conference to start. I'll go ahead and pull up the 4 assets here. So let's pull up. And then we got Bitcoin, NQ, and then oil. Yep, we're just waiting for ECB press conference now. It's supposed to start in about 2 minutes. Heyo, James. I see ya in chat. Yep, everything is currently holding their current prices. Probably no more downside right now for the NQ. Man, did Bitcoin puke or what yesterday? Oh my god.
So we are surely expecting comments from ECB's President Lagarde again. The video on the feed for all those interested.
Yep, in the top right here on the stream. There she is. Eurodollar rising going into the speech. Oil continuing to fall. NQ rebounding.
Good afternoon and welcome to our press conference. I'm joined here on stage by President Lagarde and by Vice President de Guindos. My name is Wolfgang Preußel. We are, as always, in a hybrid format, so I also welcome those who are following via video. When you have a question, please turn on your camera and the microphone so we can hear and see you. And with that, I hand over the floor to President Lagarde. Please.
Thank you very much and good afternoon to all of you. The President and I welcome you to our press conference. Inflation has been coming down, but is projected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. The Governing Council, therefore, today decided to raise the three key ECB interest rates by 25 basis points. The rate increase today reflects our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. According to the June macroeconomic projections, Eurosystem staff expect headline inflation to average 5.4% in 2023, 3% in 2024, and 2.2% in 2025. Indicators of underlying price pressures remain strong, although some show tentative signs of softening. Staff have revised up their projections for inflation, excluding energy and food, especially for this year and next, owing to past upward surprises and the implications of the robust labor market for the speed of disinflation.
Bitcoin not reacting good.
They now see it reaching 5.1% in 2023 before it declines to 3% in 2024
Oil
and
rebounding.
2.3% in 2025. Staff have slightly lowered their economic growth projections for this year and next. They now expect the economy to grow by 0.9% in 2023, 1.5% in 2024, and 1.6% in 2025. At the same time, our past rate increases are being transmitted forcefully to financing conditions and are gradually having an impact across the economy. Borrowing costs have increased steeply, and growth in loans is slowing. Tighter financing conditions are a key reason why inflation is projected to decline further towards our target, as they are expected to increasingly dampen demand. Our future decisions will ensure that the key ECB interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target, and will be kept at those levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation
Eurodollar
outlook
continues to fall.
in light of
It's been falling
incoming
ever since she
economic
started
and financial
speaking.
data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The Governing Council confirms that it will discontinue the reinvestment under the Asset Purchase Programme as of July 2023. The decisions taken today are set out in a press release that is available on our website. And I will now outline in more detail how we see the economy and inflation developing.
Ooh.
And will then
Euro
explain
is
our assessment of
dropping like a
financial
rock
and
right
monetary
now.
conditions. Looking at the economic activity, the euro
Bitcoin
area
up and away.
economy has stagnated in recent months. As in the fourth quarter of last year, it shrunk by 0.1% in the first quarter of 2023 amid a drop
Bitcoin
in
got a nice
private
pump there.
and public consumption. Economic growth is likely to remain weak in the short run, but strengthen in the course of the year as inflation comes down and supply disruptions continue to ease. Conditions in different sectors of the economy are uneven. Manufacturing continues to weaken, partly owing to lower global demand and
Oil,
tighter euro area
Euro,
financing conditions.
And NQ all
while
got hit.
services remain resilient.
And Bitcoin got hit.
The labor market remains a source of strength. Almost 1 million new jobs were added in the first quarter of the year, and the unemployment rate stood at its historical low of 6.5% in April. The average number of hours worked has also increased, although it is still somewhat below its pre-pandemic level. As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner to avoid driving up medium-term inflationary pressures, which would call for a stronger monetary policy response. Fiscal policies should be designed to make our economy more productive and gradually bring down high public debt.
Oil went higher.
Policies
NQ
to
rebounding a
enhance
little
the euro
bit.
area's supply capacity, especially in the
Eurodollar
energy
got
sector,
smacked.
can also help reduce price pressures in the medium term. The reform of the EU's economic governance framework should be concluded soon. So looking at inflation now. Inflation fell further to 6.1% in May, according to Eurostat's flash estimate, from 7% in April. The decline was broad-based. Energy price inflation, which had risen in April, resumed its downward trend and was negative in May. Food price inflation fell again, but remained high at 12.5%. Inflation, excluding energy and food, declined in May for the second month in a row to 5.3% from 5.6% in April. Goods inflation decreased further to 5.8% from 6.2% in April.
She's just reading off the
Services
economics.
inflation fell
Just
for
the
the
readings.
first time in several months, from 5.2 to 5%. Indicators of underlying price pressures remain strong, although some show tentative signs of softening. Past increases in energy costs are still pushing up prices across the economy.
When she started
Pent-up
speaking,
demand from
we
the
were all the way
reopening
at the
of
top left
economy
of this
also
chart.
continues to drive up inflation, especially in services.
Looks like we found a floor, though.
Wage pressures, while partly reflecting one-off payments, are big profits relatively high, especially where demand has outstripped supply.
Whoa, Bitcoin just got smacked.
Although most measures of longer-term inflation expectations currently stand at around 2%, some indicators remain elevated and need to be monitored closely. Turning to our risk assessment now. The outlook for economic growth and inflation remains highly uncertain. Downside risks to growth include Russia's unjustified
Looks like euro-dollar is going to be breaking the new lows here.
and an increase in broader geopolitical tensions, which could fragment global trade and thus weigh on the euro area economy. Growth could also be slower if the effects of monetary policy are more forceful than projected. Renewed financial market tensions could lead to even tighter financing conditions than anticipated and weaken confidence. Also, weaker growth in the world economy could further dampen economic activity in the euro area. However, growth could be higher than projected if the strong labor market and receding uncertainty mean that people and businesses become more confident and spend more. Upside risks to inflation include potential renewed upward pressures on the cost of energy and food, also related to Russia's war against Ukraine. A lasting rise in inflation expectations above our target or higher than anticipated increases in wages or profit margins could also drive inflation higher, including over the medium term. Recent wage agreements in a number of countries have added to the upside risk to inflation. By contrast, renewed financial market tensions could bring inflation down faster than projected. Weaker demand, for example, due to a stronger transmission of monetary policy, would also lead to lower price pressures.
Bitcoin kind of finding a floor here.
Especially over the medium term.
Oil's been going sideways for a bit.
Moreover, inflation would come down
Same thing with the NQ.
if declining energy prices and lower food price increases were to pass through to other goods and services more quickly than currently anticipated. Let's look at the financial and monetary conditions now. Our monetary policy tightening continues to be reflected in risk-free interest rates and broader financing conditions. Funding conditions are tighter for banks, and credit is becoming more expensive for firms and households. In April, lending rates reached their highest level in more than a decade, standing at 4.4% for business loans and 3.4% for mortgages. These higher borrowing rates, together with tighter credit supply conditions and lower loan demand, have further weakened credit dynamics. The annual growth of loans to firms declined again in April to 4.6%. The month-on-month changes have been negative on average since November. Loans to households grew at an annual rate of 2.5% in April and increased only marginally month-on-month. Weak bank lending and the reduction in the Eurosystem balance sheet led to a continued decline in annual broad money growth to 1.9% in April.
A nice rebound going on here. Same thing with the euro.
Month-on-month changes in broad money have been negative since December. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. The financial stability outlook has remained challenging since our last review in December 22. Tighter financing conditions are raising banks' funding costs and the credit risk of outstanding loans. Together with the recent tensions in the US banking system, these factors could give rise to systemic stress and depress economic growth in the short run. Another factor weighing on the resilience of the financial sector is a downturn in the real estate markets, which could be amplified by higher borrowing costs and a rise in unemployment. At the same time, euro area banks have strong capital and liquidity positions, which mitigate these financial stability risks. Macroprudential policy remains the first line of defense against the buildup of financial vulnerabilities. So in conclusion, inflation has been coming down, but is projected to remain too high for too long. The Governing Council, therefore, today decided to raise the 3 key ECB interest rates by 25 basis points in view of our determination to ensure that inflation returns to our 2% medium-term target in a timely manner. Our future decisions will ensure that the key ECB
Is
interest
NQ going to make a new
rates
low here?
will be brought to levels
Nope.
sufficiently
Rebounds.
restrictive to achieve a timely return of
Oil
inflation
going
to
higher.
our 2% medium-term
Euro
target,
continuing to
and
go a
will be
little
kept
lower.
at those levels for as long
Whoa,
as necessary.
oil just spiked.
We will continue to
spiked
follow
high,
a
high, high.
data-dependent approach to determining the appropriate level
Spiked like 20
and the
cents
duration of
in the last 5
restrictions.
seconds.
In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions. Thank you.
All right, question
Thank you,
time.
President Lagarde. And the first question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon, President Lagarde.
Good afternoon.
6 weeks ago, you provided a fairly similar guidance in your statement, and in the press conference, you said there's more ground to cover and the ECB is not pausing. So my first question is that if you have a similar guidance, are you willing to make the same comment in the press conference today? The second is, I wanted to ask you, what lessons do you draw from the Fed's pause? And I don't mean that you need to emulate the Fed. Clearly, the ECB has its own policy, but I mean the reasons behind the pause, as in quite a lot has been done, and there needs to be an evaluation of the effects of policy tightening. So do you see a reason for the ECB to contemplate a similar pause? And is there a risk that focusing on past projection
NQ broke
errors
below there.
could cause
Bitcoin
could
falling
increase the
through.
risk of a policy error by the ECB?
Thank you very much for your 2 questions, as I understand. So on your first question, this meeting was the meeting of a Eurosystem projection exercise. So we have looked very much at data. We have revised our projection.
Nice
and
jump
we have
in
essentially
Bitcoin. A
did
little bit of a
what we said
rebound
we would
on
do.
NQ.
Data dependent.
Oil is holding
and
its
using
gain.
the 3 elements
and
of
Euro
our reaction function
rising.
to determine what was the right decision today. And that is the reason why we increased
Whoa, there you go.
all 3 rates by 25 basis points. Are we done? Have we finished the journey? No.
Up, up,
We're
up
not
and
at
away right now
destination.
on the euro dollar.
Do we still have ground to cover? Yes, we have ground to cover. And I can even go further than that. I can tell you that bearing a material change to our baseline, it is very likely the case that we will continue to increase rates in July, which probably doesn't come as a big
that's
surprise to
hawkish.
you, but that's what I'm telling you. And this is so
it
because
immediately
we
got
are
sold off.
determined
Immediately got sold off.
to reach our target in a timely manner.
NQ still
and
holding
to
on to
continue
its
to apply the
gains.
principles that we have applied today. Data dependency, the 3 elements of the reaction function, and moving meeting by meeting. Now, obviously, we are better informed at each projection meeting, which happens, as you know, in June, in September, and later. To your second question, I don't know what difference to make between a pause and a skip and I have not studied enough the press conference of my friend and colleague, Mr. Powell. But as far as the ECB is concerned, I said what I said. We have hiked interest rates. Unless there was a material change to our baseline, we will continue to hike at our next meeting. So we are not thinking about pausing, as you can tell. Thank you.
Thank you, Madame Lagarde. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. I have two
That was a
questions.
weird market reaction,
I'm
huh?
here for, it's different this time.
Thing shoots up 20 pips
I would
during
like to ask you
the meeting
about
and then
what do you need to see for
back
core
down.
inflation actually coming down,
Oh,
so
Bitcoin
it
got
may give
smacked
you the
down
possibility to pause
below the
or to skip
14
or
the
whatever you wanna call
24,900
it in September
level right now.
over the summer period. So what needs to happen? And then I have a question on the financial conditions. You're saying that they are forcefully tighter. So at what would you make rethink that it's enough when it comes to tight financial conditions? Thank you.
Well, thank you very much for your question. I wish I could give you the very simple answer where I say when we are there and when financing conditions is such and the tightening has reached that level for corporate, for mortgages. But unfortunately, it doesn't work like that because what we know
I see oil
is
fallen and Q's
the
fallen,
target that we
Bitcoin's
have,
fallen.
which is price stability as defined by the 2% medium term, added to which we want to be confident that it stays at that target of 2%, which is why
Oil continuing to fall.
duration matters as well. But it is going to be a factor of those three elements that we will be looking at. So
Euro
it's the
taking a dip
inflation
here.
outlook, which is every month and every 3 months in particular, informed by all the new financial and economic data that we receive. It's the underlying inflation and the dynamics of it, and I can assure you that we look at multiple cuts and subset of inflation to arrive at what is the corest of the core, because we don't limit our review at core. We go further than that. We look at stripped, superstrip, PCCI. I mean, there's a whole variety of
Market's not going to like hearing
the
that.
prices and the inflation that we look at. And we need to see that.
So they're going to be tightening into a weakening economy if that's the case.
For the moment, we have some of those
They're overestimating their
measurements,
growth forecast if that's
declining
the
a
case.
bit, some of those sort of stable, and others still going strongly. And the third component is the strength of transmission, which we measure at each and every step of the way, from the market rates, bond prices,
Oil's got
by,
a rebound
banks,
going on here. Bitcoin had a
banking,
big old
funding,
green candle up
and-
$30 in the last 5
then
seconds.
to the economy, which is how we refer to the 4.4 and 3.4 loans to corporate and households, because that's how it is transmitted. And ultimately,
continuing to recover.
inflation. So that's
Bitcoin
the path that
continuing
we
to
want to
recover.
see delivering, so that we head towards our target. That's what we have done. That's what we will do, and we will stick to that methodology.
Eurodollar having
Thank you.
trouble
Thank you. Thank you very much.
maintaining
Next
some of
question
its
to
gains
Alexander Weber
today.
of Bloomberg News. Alexander, please.
Good afternoon. Thanks very much.
Good afternoon.
I was wondering, how alarmed are you about the upward revision to the 2025 inflation outlook? And doesn't it mean that the 3.75% terminal rate that was generally expected, at least until recently, isn't going to be enough? And then secondly, you've alluded to the strength of the labor market and the impact that wages are
The
having
jawline
on
on that
inflation.
guy.
Do you think you can achieve the 2% inflation target with unemployment remaining as low as it is now, or does it have to go up?
So your first question referred to the core inflation revision that we have decided for 2024. That's what you referred to? Yeah. Sorry, 25. Well, I think we revised actually all three. We revised 23 and 24, and ultimately the 2.3, which moved by 0.1 from the previous projections. I think on the basis of that, you can easily conclude that we're not satisfied with the
Your dollar is
result
paring
of that
back
inflation outlook, which is only one of the three
heading
components
higher
that
here.
we
It's
look
heading
at.
back to the
And that is the
1088
reason
here.
why we are making the monetary policy decision that we make today, and why we are thinking that unless there was a material change to the baseline, we would again hike interest rates in July. I don't want to comment about the terminal rate. This is what markets are considering. The terminal rate is something that we will know when we get there, because it is not what is driving our analysis and our deliberations. What is driving it is the ultimate destination, which is the 2% inflation. That's what we want. And there are lots of components that come in to help us arrive at the 2%.
Euro-dollar
target.
fell on that.
We spent a lot of time on the labor market. We spent a lot of time because it is becoming one of the major components of the drivers of inflation. You know, it was energy for a long time. To sort of oversimplify, energy played a significant role.
Oil holding on to its gains
kicked
here.
in, and energy is now fading, has moved now in May in slightly negative territory. But labor
Same with
and
Bitcoin
wages
holding on
in
to its
particular
gains right
is
now.
playing a significant role as a driver of inflation. And it's quite extraordinary because there have been more people employed. The average hours have been up. Wages are increasing. We had 5.2% for the first quarter.
NQ is going lower here. Bottom right chart right there.
And the output is where it is. Stagnant. So there is an issue of unit labor cost. In other words, productivity, which clearly has an impact on inflation as well. So we will continue to really monitor and dissect as well as we can this entire enigma of the labor market.
Bitcoin just saw a bit of a dump here.
Playing a critical role. And it's especially important because it is many services which are playing a large part in our economy.
$50 in the last 15 seconds.
And wages in that respect play a key role. That is partly, by the way, the reason why we have
Euro-dollar heading lower.
I was going to say upgraded,
NQ,
but
Nasdaq keeps going lower,
but we
US
have
100.
increased our projection for core inflation in both 23 and 24.
Thank you, Madame Lagarde. And the next question goes to Jan Merlin of Handelsblatt. Jan, please.
Thank you. Good afternoon, Madame Lagarde.
Oil keeps rising, though.
My first question, I was a bit surprised by how strong this revision of the core inflation projection was. Could you elaborate a bit on the reason? Is that all due to wages, wage expectations, or are there other reasons behind that? Yeah, and my second question is about the decision today. Was it unanimous? Could you maybe give us a bit of a flavor about the discussion? Thank you.
Sure.
It'll be useful to know.
On the first one, our revision to core inflation, I've started answering already in the previous question. A lot of it is attributable to the unit labor cost. That's a large chunk of the revision. The rest is what you have in the monetary policy statement, which is past upward surprises. So it's a different starting point, which is informed by data that came in after the last projection that we made in March. The latest data that we had in terms of inflation was from January. Now, things obviously changed between those January data and the May data that we have incorporated, because we cut off at the 23rd of May. So I think that's a small part of it. The large part of it is the unit labor cost. And you asked me about the decision and the atmosphere. I have to tell you that it was quite a harmonious discussion and a very good and thorough economic
Euro-dollar
discussion.
just got
As I
a
said, we
bump
went
higher.
really deep into
NQ just got a bump higher.
of the labor market.
Oil is still on its drift
tried to
higher,
really
and
understand
Bitcoin's
the forces
recovered.
behind inflation to better fight it. And it was a very, very broad consensus.
Thank you. Next question goes to...
And by the way, I just want to remind that it was a twofold decision. It was, number one, the 25 basis points. But it was also the decision or the confirmation that we would stop any reinvestment under the APP.
And now Aude Kerselek of BFM Business. Aude, please.
Thank you for taking my questions. What does the ECB knows about lag effects? What takes longer to transmit into the economy? What are you looking at more closely? And second question about your targets. According to projections, you do not expect to reach the inflation target in the next 3 years. Some economists suggest that this target is no longer valid, that 3% will be the new 2%. What do you have to say about that?
We have a target. We have agreed on the target. We are in the middle of that fight against inflation. And this is what we know. We're going to get to that 2% and we're going to reduce it to 2%. What happens next is another story. But we want to be at target and we want to be confident that it remains at target. So the two elements are going to really drive our monetary policy going forward. You had the first part in your question.
Eurodollar maintaining some of its gains. Same thing with Bitcoin maintaining some of its gains. NQ, Nasdaq, US 100 also continuing to rise.
We know that there is lag time. That the decisions that we have made in the last soon to be a year, which are monumental by all accounts, both in terms of speed, in terms of height, volume of hikes, if you will, and we are seeing some effects. We are seeing it in market rates, we are seeing it in banking financing, we're seeing it in credit, both in volumes and in rates. And there is some lag time. Not that much by sort of textbook standards, which will typically say that it's anywhere between 18 and 24 months, maybe a bit more.
Nasdaq paring back some of its gains, Eurodollar paring back some gains, oil's pared back some gains.
Situation. We really have to monitor that very carefully.
Bitcoin unchanged.
Whether it is going to be faster, whether it is going to be
Euro just rebounded
slow,
hardcore
because there has been variation in the terms of loans, for instance, to both corporate and mortgages, and therefore the transmission is not operating as smoothly as it would if everything was at floating rates. All of that we are looking at extremely carefully to measure the transmission and see how fast it moves. But suffice to say that we are seeing it already. Do we see all of it? Obviously, no. We want to see it all the way down to inflation. Thank you.
Thanks. Next question to Martin Arnold of the Financial Times.
All right, Eurodollar moving on up.
Hello, Madame Lagarde.
Making a new high for the day.
Me. Firstly, the Bank of Canada recently restarted its rate hikes, saying that the reason for this was it thought the neutral rate had risen from its previous expectations. Do you think similarly, and is that part of the reason that you're continuing to raise rates and signal more rate rises are ahead? The second question is about whether the ECB could consider skipping rate rises, certain meetings, perhaps going to only changing policy when you're issuing forecasts, similarly to the Fed's pause or skip yesterday. Thank you.
But thank you very much for your two questions. It's difficult to say whether we're in the same position as the Bank of Canada because we did not pause. So in a way, we don't have to ask ourselves whether we are at neutral rate or not. We believe that we have ground to cover, so we are not where we want to be if
everything
we
relatively
want to reach
unchanged. Bitcoin popped up.
And in terms of having to pause or having to skip, as I said, number one, we have not discussed it at all, and we have not begun thinking about it because we have work to do.
Thank you. Thank you, Madame Lagarde. And the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Good afternoon, and thank you for the opportunity. I have two questions. The first question is, today you repeated that rates will be kept at restricted levels for as long as necessary. And because inflation will be above 2% in 2025, we can expect restrictive rates for long. So how is the Governing Council concerned that you're going far and you at the same time would like to avoid unnecessarily harming economic activity? How far do you look at growth weakening in response to your policies? And then a second question is on this June, that is an historical month for the ECB. The 477 billion repayment of TLTRO is seen as the biggest daily reduction of the ECB balance sheet. And on the top, this June is also the last month of APP reinvestments. So what is the impact of these two unprecedented events, let's say in the ECB?
Very smart questions.
On impact on tightening of financing and monetary conditions. Thank you.
Thank you very much. I thought you were going to say that it's an important month because we are celebrating our 25th anniversary, which was also the date when the ECB was opened first on the ground here in Frankfurt. So, as I said,
$3 pair and back
the objective that we have is very clear. The destination, we know.
Oil
The
unchanged.
journey to get there is not over.
Bitcoin rising.
And we have ground to cover. So we will be as restrictive as long as needed in order to make sure that we reach that destination. Under the current parameters, 2.2% in 2025 is not satisfactory, and it's not timely. Which is why we're making the decisions that we are making today and later on.
Oil on the rise now.
So on the at the end of June and in the first days of July, banks will reimburse 477 billion euros that they had borrowed under TLTRO, which was this very special facility that we had put in place to help the financing of the economy at the time of the pandemic. Those loans were granted for periods of 3 years, and there were various operations in the course of the pandemic.
Oh, that's a
The repayment, which
that's a
is
little bit of a
coming
dump
due
on
now,
Bitcoin. $30
is known and has been known for a long
in
time.
10 seconds.
Actually, it was so well known that it should have been a lot higher than that, but we took measures in order to avoid that we had this sort of cliff effect of a massive
$1 going
reimbursement,
sideways
which
here.
would have exceeded 1 trillion euros. But banks know about it, they have known about it, they have done their funding plans in order to respond to the situation. And in any event, we have the normal facilities available, whether it's MRO or LTRO, if that was ever needed, just in case. The APP reinvestment will be completed at the end of June, and we will let runoff take place as of July. We have experienced that sort of partial reinvestment for now a few months, because it was decided back in March. It has been well absorbed by markets. We have not observed any disruption. And given the amounts that we are talking about, we have reasons to believe that it should be absorbed also in a smooth manner. But of course, we will be very
Euro
attentive.
dollar continuing
We
to
will
pare
look at
back some of its
this
gains.
process,
NQ
we will, as I said,
fallen.
Always
Bitcoin
have the
continuing to
means
fall.
take
Oil
action
fallen.
and to use all the tools that we have available if it was needed. Thank you.
Thank you. And the next question goes to Klaus Rainer-Jackisch of ARD Television. Klaus Rainer, please.
Thank you very much. Good afternoon. Mrs. President, you've touched on the problem of the wage increases. At your speech at the European Parliament, you touched on the problem of corporate profits.
NASDAQ rebounding.
If we take these both together, how confident are you that the relevant parties
Oil continuing
actually
to
start
fall.
to moderate
Euro
on this,
rebounding.
in particular as
Bitcoin
most of them
rebounding.
start to criticize that interest rates are already too high? And the second question, I'm also a bit puzzled about the really severity and persistency of this core inflation. May I ask you as well, please, to elaborate a little bit more where the Governing Council sees the reason for this really strong persistence? Thank you very much.
Yeah, thank you very much. The labor market situation and the employment situation is the good news in Europe. And we have never seen an unemployment rate be so low. Actually, in our forecast, we see unemployment rate go from this 6.5% that we have now to 6.3%. So we see that level of unemployment continuing to decline. We also see wages continuing to increase in the future. Now, you really asked me specifically the question of whether corporate and labor, and I'm using that term in a generic, comprehensive way, will find the terms under which they don't contribute to fueling even more inflation that would call on us to take harder monetary policy measures. This is the assumption that we make. I think economically it is justifiable, it is rational, but of course humans are humans, and it's going to be for the parties around the table to actually determine what they do going forward in terms of allocating profits and organizing these social relationships. What they can be certain of in their discussion is that the European Central Bank will take all necessary measures to return inflation to 2%. That they can count on. And we are confident that we will get there. So I hope it helps in their deliberation going forward. The persistency of inflation, as I said, has a lot to do with this unit labor cost that I have mentioned earlier on. And this is really the strong, I don't want to use sticky component because it is going to be persistent and we know it. And numbers will continue to be high in the months to come, by the way, because we believe that services are going to continue to go strongly. Labor-intensive
Negative reaction off
that. Contact-intensive services will continue to go strongly. We're heading into the summer. All the summer activities, whether it's transportation, whether it's hospitality, whether it's vacation, all of that is going to go well. So that persistence is to be expected in the short run. And there will be remaining persistency going through into 24. It declines in 25. And we have not revised upward significantly for 25 because we believe that other elements will kick in, which will reduce inflation numbers. It's and unless risks were to materialize, but under the baseline, energy costs are going to continue to, or the cost of, the indirect effect of energy costs will continue to fade. You can still find them in prices, but it is going to gradually fade out. The same goes for food. And we expect that resistance of inflation to gradually fade away. And as much as it persists, we will persist.
Thank you. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madame Lagarde. You have delivered quite a strong
Everything currently
message
holding their
about
current
wages,
price.
and I'm
Oil
a
actually
little bit
fallen.
scared. Has the risk of
NQ rebounding.
inflation spiral increased since March? And second question about the projections. If 2025 is not acceptable, do we need to see 2% inflation in 2024 to the ECB to consider that the objective will be achieved in a timely manner? Or what is exactly a timely manner?
Well, everything getting hit.
Well, first of all, on wages, we are not seeing second round effect. We're not seeing this wage price spiral. The only thing that I'm trying to say here is that we have to avoid what I have called the tit for tat, where in response to inflation, both corporates and labor want to receive full compensation, which obviously would possibly lead to that second round effect that I was alluding to. Obviously, the sooner the better in terms of when do we bring inflation back to 2%. But we have to be also realistic, and we have to be measured in the response that we give, but very determined in the delivery of those measures, and persistent.
Thank you. And the next question goes to Jean-Philippe Lacour of AFP via WebEx. So Jean-Philippe, please turn on your camera and your microphone. We cannot hear you, Jean-Philippe.
Oh my God. It's 2020 Zoom all over again.
Yes, now.
Thank you for giving me the opportunity, but I'm afraid that my question was already asked. It was on this wages, and if you see a wage price spiral, the ECB wants to avoid, you said not, but it's a bit a thin difference. You said the wages are having a huge impact on inflation on one side, that's what you say, and on the other side you say that there is no kind of wage price spiral, so it's not really clear to understand. Can you maybe give us an explanation on how you can come to this conclusion?
We just all wish that everything was clear and simple, wouldn't we? What I said, and thank you very much for your question, what I said is that unit labor cost, which is slightly different than wages, negotiated wages, however you want to measure it, but unit labor cost is having an impact, or is rather causing the revision of core inflation projection. That's what I'm saying. And you can certainly have that projection and at the same time acknowledge that today we are not seeing any spiraling of wages and prices that would cause this second round effect that we would be very concerned about.
Thank you. And now to Javier Luengo of Negocios TV. Over to you, please, Javier.
Hi, can you hear me?
Yes.
Okay, thank you for taking my question. You said that the financial markets are not feeling the impact of the balance sheet reduction. Do you expect to be able to increase it on July onwards? And do you think you have room to reduce it?
You know what, I'm going to ask you a favor. If you could repeat your question. The only thing I heard was something that actually I didn't say, but you said I said, which was financial markets will not react to the end of APP.
Reduction.
Yeah, but then,
I don't know if do you think that you have room to reduce it further?
To reduce it further?
Further, yeah.
Well, you know, we two things. One is the TLTRO reimbursement that is falling due at the end of June, which was anticipated, known by all parties involved, is taking place at the end of June and in early July. It will, as a result, reduce the balance sheet of the ECB by 477 billion euros. The second part of the decision that we made today was to stop reinvesting redemptions under APP and let APP move into a runoff mode. That's all we decided. And that means that, for instance, the PEP continues as was indicated in the only part of forward guidance that we still have in our monetary policy, which is until 2024. We continue the reinvestment and we apply flexibility if and where it is needed. There's no plan to change that.
Thank you very much. That concludes our press conference today. Thank you very much for following. Our next press conference is on 27 July.
Share dollar moving lower on the end of the press conference announcement.
Bye-bye.
Thank you.
We'll see how things perform from here. Go ahead and hide that. Hey, any thoughts? I thought that was pretty boring, but it came out pretty much as expected. The risk of going above 109 on the euro dollar, potentially hitting 109.50 for the month, absolutely still in the cards. I don't know if you guys actually believed me or not 2 hours ago when I started this stream and I did the analysis for the whole month ahead on Eurodollar, and I pointed out, oh, you know, we could go 150 pips higher potentially from here, and there's a real risk we at least get close to 109. Geez, it's almost like I have indicators for that or something. If you want to get access to these indicators and access to the trading group and one-on-ones and a list of all my trades and a chat room, and then access to a whole bunch of group trade plans, go ahead, join my trading group. It's in the WAP link down below, WAP at Boss Benchmarks. And every single day, Sunday through Friday, I do these daily plan streams here on Plan to Profit. Man, oh man, am I so freaking done with this week. I want to get on into the next week of trading already. Let's see here. Looks like dollar CAD hasn't moved at all. Euro dollar has gone up, 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 and up, and I've been selling in the rally on the way up here, and that's been working out phenomenally for me so far. And I have a feeling that by the end of the week, I'm probably going to be in the green here. And definitely, I think definitely probably by the end of next week here. Let's see. Yeah, pretty good shot. I have a, yeah, especially if we get even a little pullback from here, I have an especially good shot of ending next week in profits. I don't know, do you guys think that this was a good ECB meeting? Because in all seriousness, I think that net, it came out exactly as expected. Nothing super fantastic. Sure, you know, she came off hawkish, right? She came off hawkish. But, like, they needed to hike 50, or they needed to do, like, significantly more tightening with their, you know, with effectively their stimmy money. And don't get me wrong, they're doing more tightening with that, but it's just, I don't know, is that enough? Is that enough to improve the Eurozone's relative value compared to the United States? Well, right now the market tends to think so, because right now we're at 108.8, right? And I see the risk of us going to 109.5, and if I just pull up this chart here real quick and I go to like a 15-minute, I mean, we effectively moved 70 pips, and at the very beginning of the day I said, hey, you got to be careful that you could potentially go all the way up to here. That's the title of this video. You could get like another 130, 150 pips. Got to be careful with this sort of stuff, right? But if you got some statistics, if you got a trading strategy, if you plan to profit, right? If you plan to profit, you have a lot less issues. A lot less issues. Man, oh man. Well, I think that's it. This ECB meeting was kind of dull to watch, right? Tomorrow is Friday. One more daily plan stream for the week. And then come Sunday, there's the trading group exclusive week ahead trade plans, where I go and I look at trade plans for the entire week and partially for the month ahead. to figure out where the most likely tops and bottoms for the week ahead and the month ahead are likely to be. So with that all said, I want to thank you guys for watching. My name's Joe Boss. I've been your boss this stream. Please subscribe, leave a like. Every single time I go live, there's more and more people watching. We had more people watching on FOMC yesterday. That was a bit more of a bombastic day. But this stream, on average, did better than like the last 5 streams I did. So, seriously, thank you guys for watching. And I'll see you guys in a bit. How about I put on that flower guy? See you guys tomorrow, 4:30 a.m. Pacific, 7:30 a.m. Eastern. If you want to hang out with me right now, go into the Discord. I'll be in the Discord.